Hey everybody, good morning. Welcome to Ready Set Trade. This is Doc Severson. Today is Friday, the 19th of May. Let's get going. See what's going on today. All right, so big event today is we've already gotten past our morning Fed speak with John Williams. Jerome Powell comes on at 11 o'clock. So that'll be interesting to see if he will push the market around in some form or fashion. And it's usually because he's either talking about continuing to drive interest rate policy, right? So that's the thing here, and this is what we're seeing is that we're starting to see the market get nervous about the Fed, get excited about raising rates again one more time. One more time. That's the result of all this Fed speak this week is that even though the market has gone higher, and we've, as of yesterday, broken out into new highs for the year on the S&P, and certainly the NASDAQ is super strong. But at the same time, we do have rates continuing to go higher, very much like a 2007 type scenario. Oddly, we still have a 62% chance of showing in July that nothing will happen in the next two rate hikes or in the next two meetings. By the end of the year, it looks like we are cutting rates. Go figure, even though the Fed says that there's no way they'll do that. Okay, we had Deere coming out this morning. Let's see if Deere has, let's take a look at Deere's results here. Big breakout yesterday. It's one of those things where it's like you're waiting for the breakout, you're waiting for the breakout, you're waiting for the breakout. It's never going to come, and then finally it comes. All right, let's see. Who do we got out there? We got Land and Andy. Hey, DAX at all-time highs. Any positive speak could really make this market lift off today. Yeah, I think so. Could be. Market's looking for, this is what I've been saying for literally months now. The market's looking for a reason to break higher. We have an ascending triangle pattern on the full S&Ps. If we look here at let's look at the fractals here for a second on the ES. This shows better on the ES for some reason. But this is what we're seeing. All of these, the 4,200 level has been rock solid resistance every time the prices come up here, but each time there's a higher low every single time all the way up here. So this is a market that wants to go higher, looking for a reason to break out. And the measure move target for these is the open end of the triangle, which is a good 700 points. And so if you append on this, we're looking at a measured move of 4,900, which would be all-time highs. Hey, Bob, good morning. All right, so let's see. We'll go back to that in a second here. Next week, we'll be here Monday through Friday as well, too. I want to look at and see how close we are at the long iron condor. We have a long iron condor on for the end of May. And lately, we have not done well with those just because the market's been so range-bound. But here's where it sits right now. Now, this looks odd. But here we are in the range of the long iron condor. And so that's about 4,200. We're going to need to see it go another 60, 70 handles for us to get anywhere in this one. So we've gone absolutely nowhere over the last since we put this trade on, which is at least a month or so. So we'll see whether or not we get that movement in the next 2 weeks. All right, looking at the intraday chart, what do we got? Yesterday was a lot of fun. Let's see, what do we have here? We have 3 minutes to go. So yesterday, we had a very, very flat opening range, and then boom. This thing took off. You can see how it just abused the upper expected move, used it as resistance, took off, came back down at one point, and then lifted off into the end of the day. So I did take an expected move iron condor in the room yesterday, and it took the better part of, what was it, like 3 hours, something like that. Let's see. We got in at 9:35, and it took 4 hours. It took over 4 hours to close. So that was ugly. Took over 4 hours to close. But that's the nice thing about the expected move iron condor is that you can, if you choose to do so, you can say, hey, I've defined my max risk from the first. This is what happens. The market will trade. It will move around. It rarely just goes in one direction and then just pins there without moving significantly around during the day. This is what we've been seeing now for months. And the advantage with the expected move or the low probability condors, you can design them so that you can say, I don't care what happens as long as the price comes back down in the range, we're good to go. And that's the good part about them. The bad part about them is that they take a long time. The iron fly is much, much faster. But we're in a market right now where we're expecting to see big moves. We're expecting to see big moves. And so this is why we've been playing the expected move iron condor this week. We now have about 60 seconds left to go for today. So let's look at today's expected move. Expected move is 21.8. So we are probably, the market is pricing in a little bit of volatility for Herr Powell. Mr. Powell is coming up at 11 o'clock. So probably not going to get a whole lot of decay. I think it's probably not going to be a good day for us to put a 0 DTE on. So we'll see. We'll see if there's any decay. If there's any decay showing up, if we start to see that expected move start to shrink, then I may consider it. But right now, this is a little bit higher than what we've seen over the past week. And may not get some decay. John saying, got caught with that early stability and got spanked for doing the 0 DTE. 90% success rate is not 100%. Okay, so here we go. Yeah, sorry about that, John. So here we go, 21.77. Let's see what our opening number is. And that is going to be 21.81. 21.81. Okay. 21.81. Let's see what our expected or our opening print is. Opening print. Nice little gap up here we got. Opening print for today, 42.19.5. 4219.5. First time we've seen 4,200 in a long time. Okay, so you can see how big that breakout was yesterday. So we got a little bit of a gap today. Let's measure this gap, or let's at least track this gap for today. It's not that big. I wouldn't be surprised to see it closed at some point today. Okay, we're going to go over to our trade tab. Active trade tab. Upper expected move for today is going to get moved up to 42.41. Wow. 0.31. 42.41.31. Way up there. Lower expected move is going to get moved up to 41.97.69. Way up there. Okay, so there we go. There's our little gap for today. And we're going to take this anchored VWAP and move it up to today. We're going to start anchoring it from today's opening bell. And there we go. There is today. Not much of a gap to speak of. Not much of a gap to speak of. Okay, so let's do this. First of all, let's set an iron fly. Let's set an iron fly. Let's see what I've got for risk profile here on this thing. Yeah, that's all right. Let's set an iron fly for today just to get an idea of what it's doing. Since we started off at 21.81, let's go up to 25 points. And we're going to center that right at 42.10. 42.10, 42.10. Yeah, yesterday was nasty because we had such a small opening range. It was so quiet, and that lulled everybody to sleep, and then it just took off. I hate those days, but there's not much you can do about them. The best thing you can do is to set up something with better risk control than an iron fly. So you don't know when those things are going to show up. Okay, we're going to go 25 points wide. So I'm going to take this up to 42.35. And then 42.10 minus 30 or 25 points is going to be 41.85. 41.85. So there's a $15 credit. And there's our trade. So we're going to watch the decay on this guy. We're going to watch the decay on this one and see how it handles it. We are coming back down again. The daily and 78 minutes on the Qs are exhausted. Might this be a setup to sell a 5 to 7 DTE iron condor? Better to enter after Powell speaks. Yeah, maybe. I think that would be a good idea. I think entering in front of Powell is inviting getting run over. You just don't know. But yeah, you could trade that on the NDX as well too. If we go over to the NDX, let's see what kind of width we could get on something like that. So first thing you'll notice here is for some reason we don't have, why is this the case here? Why do we not have, is that real? Let me look at this on Tastyworks. I thought we had a full complement of 0 DTE options. Well, that's really weird. There is no May 19 on here. Are you guys seeing the same thing? Let's see what E-Trade is showing here. Oh, I see what's going on. So these are the May 23 AM settled. These have already gone through. These already stopped trading yesterday. So we don't have any weekly options for the 19th of May. Interesting. So the closest thing that we have is Monday options. But like what Steve was talking about, we can do 5 DTEs here, which is 6 trading days or 6 calendar days. And let's see what you could do here. I have not sized one of these things before. That's really, really big. But you could do, you could just do a simple low probability iron condor, setting it up maybe for about, so you're going to have to do 10 wide first of all, unless you want to go a little further out and hunt down to 5 wides here. So if we did this around 5 wides, let's try this. Yeah, Andy, I got signed up for a trial and I just, I'm just beyond overwhelmed right now. What I had to do also was to set up I had to change how Thinkorswim operates. So I had to call up the broker and change how it operates. So it's not trivial. It's not trivial to get it set up. But I think that's the future for everybody, is we're going to be doing bots in some form. We're going to be doing bots in some form here. So let's see, we can do that, and let's go out to maybe 14,060. And then 14,070. So I think you're going to have to go 10 wide for these things and look for about a $5 credit. That's the nature of the beast with these things. Yeah, the problem with the NDX, if you look at the NDX, is if we look at volume and open interest, we are going to see next to nothing. I mean, look at this. Look at the open interest on these things. You know, nickels and dimes. That's the problem. But Steve's original question was on the Qs, and you can certainly do the Qs. You can certainly do the Qs. Man, this is brutal. I think we're getting shorts pinned. I think the shorts are getting pinned right now. Let's see what kind of market internals that we have. We started off relatively strong today, and we're still holding pretty good. But as we've seen lately, it's not necessarily the number of stocks that are moving, it's who is moving. So let's see who is moving today. Well, it's not AMD, that's for sure. Okay, sector spiders. Most sectors are up except for XLY. So XLY means that Amazon and or Tesla is getting hurt. Amazon slightly down. Tesla is up, surprisingly. Okay. Let's see, who's moving? Apple's gapping higher, but it's almost like an exhaustion gap. Let's see, NVIDIA. NVIDIA's coming down a little bit today. AMD is down today, although they're coming off the bottom for the day. Microsoft, Google. Look at Google move. Good Lord. Super strong. So Google is almost single-handedly pushing the market around. Although the Dow's negative today, so let's keep drilling here. We have under the Dow, what is not working? Nike is crushing the Dow. Walmart is also negative. I like the idea of a long call spread strategy. What strategies am I looking at? I would look at income strategies to begin with on Option Alpha. I just want to be doing, now understand that they only do like the ETFs, like SPY, Qs, they don't do SPX, things like that. There are certain strategies that they do not do. So they're very, very limited. They force you to fit within a certain range of things. But it's certainly, there's enough things to keep people busy. But yeah, that's my intent to, I'm going to have to like carve out some time to do something like that. It's so frustrating because there's so many things I want to do right now and so little time to do them in. And who knows, maybe maybe down the road we stop doing the live trading room and we just send out signals or something like that. Maybe that's what we end up doing. I don't know. You guys tell me. Okay, so for now, let's go back to this. Let's go back to Mr. SPX here. And not seeing any time decay. There's no time decay on this right now. In fact, it's even gone higher, as Andy was pointing out. So we're up to 22.9. We're up to 22.9. Now, could I do an iron or an expected move iron? Let's try an expected move iron. So these we want to do at about a 20 delta. So I'm going to go maybe 41.90. So 41.90, 41.85, and then we're going to go up here to about 42.35. 42.40. That's $1.60, $1.70. So let's see. Could we get that one? Could we get that one? I'm willing to give this one a shot today. Let's see. Is it truly $1? If I can get it for $1.65 or so. So this is what I'm looking at here. And again, there's no stop on this. No stop. So you got to be okay with waving goodbye 335. So if this thing just rips, or if we sell off and go back down into the range, then look for an elegant exit at some point today. But this one I'd be willing to look at. All right, let's see what we can do here. Oh, man, all my Delta alerts are firing today. Okay, let's see. Now I have to go through the 35 steps here to enter a position. Let's see what we're looking at right now. I'm going to try $1.65. I'm going to see if I can get $1.65 on this. Good morning, Fred. What is this doing here? It's right at midpoint. So what's going on with market internals? They're holding pretty steady. I mean, we've got Google just ripping today. Absolutely ripping people's faces off today. And we have the SPX actually over 4,200. We have the SPX over 4,200 today. Now, I may have some of the 45 DTE positions may need adjustment. So some of these that we have, let's go back and let's see. We got rid of all the 9 Junes, thankfully. So there's a 16 June. Which is 39.95, 4,000, 43.05. This is it. So this one's getting tight. And let's see if our alert has fired on here. Oh, I don't have the alerts on this. Don't have the alerts on this. So it's still doing okay, but we're getting close to the calls. And so what I would like to do today is not immediately do anything. If I'm going to be doing any adjustments, it's going to be this afternoon. I want to make sure that this thing is not going to do a pop and drop where we get a close, just sort of a throw over where it rallies up, gets all the retail involved, retail chases after this, and then all of a sudden we sell into it. So I do not want that to occur. So any adjustments I will do will be sometime this afternoon. And that may mean that I don't get as good of an entry on it if we persist above 4,200. I may lose a little bit of edge on that, but that's okay. We still have room to go before we have to adjust again. That's fine. Okay, what else do we have here? We have, and I'm not being filled on that $1.65, by the way. It's down to $1.60. Let's see what it looks like. Okay, let's resubmit this for $1.60. Next position, 23 June, 39.75. So this is a big one. 39.75. 4,000. It's this dude here. Okay, right at break even. Still doing okay. Still got room. Got room all the way up to 4,300 plus on this, so no panic. Next one. I don't think that's an official trade. I don't think we did that officially in the room because that one's 25 wide. Next one we have a couple of 30 Junes, 40.25. Let's see where they at. 40.25, 40.30, 43.40, 43.45. And that's this one. Again, lots of room. No reason to panic. No worries. Not really moving that much today. We are generally trading above the anchored VWAP today. We're generally trading above. Okay, so there's a $1.60. I got filled at $1.60 on this one here. So that's an expected move iron condor. An expected move iron condor. I do not have a stop with this. I will let the price trade wherever it wants to go. So what I'm going to do here is I'm going to, and I wish I still had my grouping, the grouping. It hurts me that I've lost that, but that's what you got to do if you want to do automation. So I'm going to create a closing order here. And we got in for $1.60. We'll get out for $1.10. Very, very unlikely for me to get out before Powell has spoken. It will probably pin this position in until after Powell speaks. And then we'll get some kind of movement, and then this thing may fire. Okay, so $1.10 limit, debit. We're going to buy back for $1.10. There we go. Let's see what's moving today. AMD is way down, but it is recovering. Silver is up today slightly. Let's go look at our market watch and let's see what's moving here. So Nike is down today, but we have Caterpillar. So we have like industrials are up today. Let's look at the NASDAQ. NASDAQ 100 is actually negative today. So like Airbnb is down and AMD is down. Applied Materials is down. We have CrowdStrike up. Advancing 64, declining 41. So you can see, where's Google here? Google was way up and it's coming in. It's actually trimming off. It's coming in really fast right now. And this is affecting the NASDAQ. So somebody is selling Google hard. Is it time to close out the SSO call? Great reminder. Thank you very much for that. let's go over to the SSO. I wanted to talk about that one today and almost forgot. So here's the deal. So Steve, if we get a quick pop up to say like 56 or something like that, then we'll want to stay in this and sell into strength. Now that strength is not going to be a whole hell of a lot, but quite honestly, looking at the profit and loss diagram right now, there's no point in selling this right now. There's no point in selling this position or closing it. Selling the position would involve buying back the put and then selling the call, which is out of the money. So we just did not get a very early. This thing has just been consolidating for so long. We got a nice entry on those puts because we entered them on a pullback. We got a great entry on the puts to give us really, if we got assigned at 38, that'd be awesome. But we didn't. We just haven't seen the movement from this thing in like forever. So, but I want to give this a little bit more time. We still have a little bit more time to, if this thing is going to run, it's going to do so really quick, I would think. And you got to be in it to win it. So right now, selling out does not buy us anything. We won't lose money on this trade. We won't lose money on the trade. So there's no profits to protect right now. Let's see, what am I seeing on that? So looking at this position, this SSO custom spread position, it's up by 1250, right? So it's been like up $5 for like the longest time. So if we can see a quick breakout move, Steve, we will sell into that one. We will sell into it. We will sell into it. All right, what am I doing here? Let's see. Now I've got some we have some QLD. We have some QLD that we did $52 covered calls on, and those are in the money, and those are underwater right now, and that's okay because we have an extreme exhaustion signal at this point. We have an extreme exhaustion signal on the NASDAQ. And our cost basis on those was 45 on the QLDs. Or at least the second position. I think we have some at 71 or something like that. I'm not just gonna let those hang on. But if we can just sort of chill out and wait for the price to consolidate, we might be able to get a better exit on those. We might be able to roll them out. We might be able to do a lot of things. So worst case scenario is that we get called out on those. They're in the money, or sometime over the next month we get called out on them, either before expiration or the day of, and that's okay. That's okay. So when you get a market that's just gone completely berserk parabolic like this on a breakout, not much you can do if you have covered calls. So unless you have the NASDAQ is starting to slip a little bit more now, and I think this is because we're starting to see this slip, and we've lost a lot of mojo from Google. Apple is losing mojo and everything. This was my concern today, is that we get this breakout and then we end up with a throwover. A throwover is almost like you got a clothesline and you take something and throw it over it. And that's the same thing that happens is when we get, boy, I tell you, there's so many parallels to 2007. This is a little bit eerie. 2007, if we go back to there, 2007, let's see, where was this one? Yeah, this was particularly, I remember this one here. We were in a Thinkorswim used to do their road shows, right? Thinkorswim used to do their road shows. And we were in a road show, and this market was just absolutely ripping. And then all of a sudden, here's the shot over the bow that hit us. And then Bernanke basically said, well, we're going to pause rate hikes. And then the market rallied into October, and then it lost it. That was the beginning of the end. So we're seeing a lot of the same type of, that was a strong after big consolidation for weeks and weeks and weeks. We get this big breakout, and then it fails. So be really, really careful of breakouts. The thing that I'm trying to justify right now is we have not successfully executed a breakout from a consolidation for the past year and a half. So this would be a complete and utter change in character, which I'm not opposed to, because that would show us that the market is moving into quiet and trending, which is a good thing. I think most people would find that to be a good thing, because it's much, much easier to trade than a choppy market or a bear market. Okay, let's see. Oh my goodness. We only got a minute left here in the opening range. Let's see what's happening in the opening range. Not much of anything. We are generally trading above the anchored VWAP. So that is considered. So a couple of points here today. First of all, here's the gap. The gap is still out there. We did not close the gap on the S&P 500. So the market is not that interested in closing the gap right now. Now, it may later on, but that tells us something about the psyche of the market right now. If it was completely sideways and directionless, we would have closed that gap immediately. Number one. Number two, the market is generally trading above the anchored VWAP. It's generally trading above. So we spent a couple of minutes below it, and then we immediately got above it. And right now, the market is buying at the anchored VWAP. Market is buying at the anchored VWAP. So let me take a last look here for today. We have the quarterly services survey at 10 o'clock. Okay, that's not going to move the market. So the next real thing that we have really is Powell coming up at 11 o'clock. And let's see what alerts got fired today. What alerts got fired? So we have triggered a couple of these. 30 Junes at 43.15, 43.20. Okay, those are the most recent ones that we put on. Those are some of the most recent ones that we put on. So if that is necessary for us to adjust those, and the way that we would do that, let's see. In here, we did a 43.20, 43.25. Let's see if we can find that. 43.20. Here it is. Okay, so this one, the delta has doubled on the short calls. So if we needed to do something about this, what we would do is we would buy back the 40.25, 40.30s for 30 June. Okay, so let's just go into the chain. So let's find the 30 Junes. Okay, so here they are right there. No, they're not, because I have these in. These are in, this trade's in E-Trade. We did this in E-Trade. So we did the 40.25, 40.30s. We would close these out, and then we'd move these up. We'd roll these up to about the 41.20, 41.25. So you want to roll these back up to the next. So in doing so, you'll take a profit by closing out the old credit spreads down there, and you'll establish new credit. for the position. So you actually end up trimming the risk down in the position. However, what you will also do is you will significantly narrow down the trade, right? So if we're doing like 41, what did we say, 41.30? You're going to make the trade now this narrow. We're not moving the calls. The calls are still way above 4,300. But in the event of a whipsaw, this will not be good. All of a sudden, we've moved it. You know, if we end up selling off at the end of the day, we don't want to do this. So I won't do anything until this afternoon. If the price is still holding steady, then I will have to do that, though, because it's showing that the breakout is holding. But right now, we are starting to lose it a little bit. Market's getting nervous in front of, we now are trading underneath the anchored VWAP. And so if those deltas are no longer doubled, I'll go back and look at the alerts. I'll let you guys know one way or the other as to what we have to do. But that's the only one that fired the threshold delta. So at the end of the day, you don't have to do them. You don't have to do them. What I find is the less you do these things, the better off you are. The less you do, the better off that you are. Okay, one last look at this iron condor. Look at that. We're getting some decay. How about that? We are getting some decay. Just a little bit. A little bit of decay. A little bit of decay never hurt anybody. All right. Let's see where the order is. So right now we're working that one. So yeah, we got it at $1.60 and it's $1.55. Wow. Okay. I doubt that I'll be out before Powell starts speaking. If we can, great. If not, I don't care. All right, guys, that's all I got for today. I hope you guys have a terrific weekend and everything works okay for you. Please let me know if there's anything I can do to help. Watch out for the throw over today. That could be, it's not that I'm predicting that. I'm just, actually, one last parting thought here. What I'd actually like to see, what I'd like to see from this market would be a throw over coming down to 4,000, completely creating the most unbelievable negative environment, and then we rally off of here like nobody's business. This is what I'd like to see. And then later on this year, that's when the fun begins, because I think we'll probably end up losing it again. So, okay, guys, that's all I got today. Let's see, Fred, last question. What does the energy charts look like on SSO? They'll be the same thing as the SPX. They'll be the same thing as the SPX. So if we look at the SPX, if we look at SSO, they should be essentially the same things. But they are a derivative of the SPX. So they are subordinate to the SPX. So you always try to go with the most major. The NASDAQ is starting to lose it today. And the Dow is actually strengthening, which is odd. Strange things. Okay, so we'll see what happens at 11 o'clock as Herr Powell gets on board. All right, guys, take care. Have a great Friday. Have a terrific weekend. See you on Monday. Adios, amigos.